call again today. It seemed like we just connected on yesterday, and we are back again today. Okay, so let's see who all we have in the room now. All right, we've got G, Dave, Savannah, uh, Damon the trainer, Malik. Oh man, Malik, I forgot to call you back today. Good to see you on here.
Yeah,
Uh,
Damon didn't call me back either. So
man, dude, we've
I'm
been on
over.
the phone so much today. It's been crazy.
Malik, I would have called you if I said I
Oh,
was
you
going
were on
to.
the phone with me, man. What are you talking about? See how he did? He was one of the ones that was on the phone with me all day today.
Malik, if
So
I
you
told you I was going to call you, I would have, buddy.
I appreciate that, G.
I get no love around here, man. That's why I'm gonna hang out with Sean from this day forward. All right, y'all. Let's go ahead and get started. Hey, Benny. Hey, Kaya. Eva.
aloha.
Aloha. Aloha. All right. All
Howdy,
right.
howdy from Texas. By
Hey,
golly.
Bo.
Hey, man. How you doing, guys? Okay.
Right.
Let's see. Let's see. Let's see. G, you got anything you want to share with us today before I get started?
You look nice.
Thank you, man. But flattery, like I told Joy and Dave, gets you absolutely nowhere.
No, I just wanted to say hi to everyone. Sorry I haven't been on Thursdays. Um, I go to therapy and I'm pretty crazy, so it's a good thing for everyone. And
No, not you.
you know, you you wouldn't like me when I'm angry. Uh,
No,
but good to be back.
good to have you
Yes.
back, man. So
Have
just
you
for
back.
that, we're going to torture you today. All right. It's going to be fun.
Please don't come for me. No. I was telling Eva, I just found my material. I hadn't been checking my message. Well, I've been checking my message. I just been wondering where my messages were.
Yeah.
And like I'm just climbing aboard, like as far as the commercial
All right. So
part that you
are you
yeah,
trying to tell me to be easy?
please be easy with the aloha girl, okay?
All right. We're going to be easy on you today.
Thank you, thank you, thank you.
All right. Okay. Okay. So here we go, guys. Commercial lending. This is the part two of our last um, commercial lending. I'm going to cut my camera off, guys. The last commercial lending training. So there's two parts to this as it relates to the loan packaging. Okay. So we're going to finish this up. It's not a whole lot under this episode today because we did a lot last time as it relates to the packaging. There is some additional information I want to share as it relates to the packaging. So please, be prepared to write down some of this information today. Okay. And then I think we just have, after this, we may have two more sessions left before the exam, which will be the final exam that would cover the overall commercial lending course. Is going to be on I believe the 16th or the 19th. I believe 16th of July. The 16th of July. Then that's when you get your certifications, things of that nature. Okay. Okie dokie. All right. Am I recording here, man? Okay. Yes, I'm recording. All right.
It says being recorded.
It says I'm recording, right? All right.
Yes.
Okay. All right. So here's our session 7. All right. Let's get down to the nitty gritty here on commercial lending broker training program. Okay. So we're still on loan packaging. This is the packaging of the documentations and how to properly package commercial lending deals. What's needed in these deals? As I remember first getting started with commercial lending and the intimidating part of commercial lending, and some of you all can attest to this, the intimidating part was really not two things: not knowing what to ask for, and then also not knowing a lot of the language that's used in commercial lending. So those were the two intimidating factors prior to getting acclimated to the process. And I think some of the things that, when you're talking to clients, or you have clients that's interested in, getting commercial funding, one of the things you probably are wondering, like, what should I ask for? Okay. And then you kind of wait for us to tell you, hey, get this, get this, get this. But there's standard documentation that to ask for. So in the last training, we talked about the executive summary. We talked about, getting the bank statements. We talked about the debt schedules. You guys remember that, right? We talked about all of those things on the last loan packaging training. Today, we're going to talk about additional documentations and what that documentation is and why it's needed. So I want you guys to have, in-depth information, not only in why we're asking, what the documentation that we're asking for, but I want you to know why that information is needed. Does that make sense? Okay. All right. So, so loan submission is the process of delivering the loan. All right. Delivering the loan package to a lender for review or an approval. The reason why you want to make sure that who remembers this from the last training? Let's see. Why do you want to, why is it important that you make sure that the packaging, the loan packaging, is done properly prior to submitting? What's the idea behind making sure you got the right documents, you've asked for the right documents, and everything is packaged together before you submit for the lender review? That was last.
To delay, not to delay. It wouldn't delay everything if you didn't have it set up right, correct?
That's one
Sorry.
of the
Higher
reasons.
odds of approval.
What was that? Well, someone just said it. What did I hear?
Higher odds of approval.
That's correct. So Sean was right, but the answer I was looking for mainly is what Dave just stated. It increases the approval chances. So it increases your approval chances as a broker. You're in business to making sure these deals get done. All right. So it increases your approval chances, but you need to understand what those documents are and what it is used for. So it matters because 80% of the loan rejection happens due to what? Incomplete or unclear submissions. So your package must answer these questions. When you're packaging your loan submissions together, what you're looking for, or what the underwriter is looking for, is number one, can they trust you? So how do they do that? They check to see, number one, if your business is legit. They want to look and see how long you've been around. They want to look and see how many who you've done business with. In some instances, they want to look at your financials. They want to look at what your plan is. Okay, all that can be detailed and construed as being able to trust you. All right. Do you really need the money? They want to determine, do you actually really need this money? Okay, this is what the package is going to show in your proposal. Will you be able to pay it back? That's the biggest thing. Do you have the capability of paying this loan back? These are the three things that kind of stick out with me. All right. So in the loan packaging and the required documents and their purposes, when you're preparing a commercial loan package, the following documentations are typically required. All right, depending on what type of loan it is, if it's a business acquisition loan and you're looking for business funding, one of the things they may ask for is a business plan. The bank may ask for a business plan. All right, so Why is it that the lender would ask for a business plan in commercial lending? Lenders want to ultimately understand your business. They want to know what your business model is. They want to know what your growth potential is. And they want to know how you plan to repay the loan. Remember, the underwriter's job is all about risk minimization. They want to protect the lender's money, and they do that by making sure that they can trust you, that you really need the money, and that you have the capability of paying this loan back. So, number one, a business plan is something typically a lender may ask you for, depending on the type of loan that you're asking for. And a business plan is a comprehensive document that outlines the business mission. It outlines the service. It outlines the product. It outlines the target market. It outlines the operation itself, and it also outlines the financial projections. So a business plan is sometimes called upon from lenders. Okay. And also, a lender will also ask, number two, for a loan request summary. It's called a LRS, a loan request summary. Okay. Write that down. And what a loan request summary is, it's just really a clear statement of how much money is being requested and how they're going to use it. How is that customer going to use it? We want a clear statement of how much money that you're requesting and how you're going to use it. So sometimes the lender is going to ask for our LRS, a loan request summary, okay? And it's needed because lenders need to evaluate the purpose and the necessity of that loan and to ensure it actually aligns with their lending criteria. That's another thing that you have to be mindful of, is that each lender has its own criteria and it has its own appetite as to what it desires to lend out and for what reasons. So this is where we come in at to know what type of lender we're dealing with, what their guidelines are, and exactly what they're going to be asking for, which is why this training is really important, so you can know exactly what to request from these customers prior to going back to the lenders. Another thing that they're going to ask for is personal and business tax returns, especially in loan or business acquisition type deals. They want to see the personal and business tax returns. Now, typically in real estate deals and just buying a property, they don't necessarily want to see personal and business. Sometimes they don't want to see any of the tax returns, depending on the deal. But if they're going to ask for tax returns for purchases, they typically don't want to see the business, right? But when it comes to personal and business taxes, that's because they want to. You typically are looking at some type of business acquisition type deal. So these taxes demonstrates business profitability. Okay, it shows financial management. It shows validation of your income, and this is what they're trying to determine. They want to make sure that your income is validated. Okay, so it's just really filed tax returns showing your income, expenses, and your tax liabilities. So lenders might ask for personal and business together, or they may just ask for it separately, depending on the type of loan that you're looking for. If you're looking for personal funding, typically they're just going to ask for personal tax returns. If you're looking for business funding, typically they're going to ask for business tax returns. But in the case of business acquisition, they ask for both. Okay? In the case of business acquisition, they're going to ask for both.
And well, in most cases, isn't the LLC just a pass through to your personal income anyways?
The LLC is it?
Yeah, so the LLC is just a pass through to your personal income tax, right?
So the LLC, the LLC is just your business entity. It doesn't have anything to do with your personal income. No.
Well, no,
No,
it's
he's
reported
talking.
on your. It's
He's talking.
reported on your.
Go ahead.
Yeah, he's talking about a single member LLC that has a pass through. So that would be that. a single member LLC would file a Schedule C. So it's technically almost considered a sole prop if you're a single member.
Right. You have a business, but you report it on your personal income tax. So I was just going to mention that could be a reason why the personal income tax would be needed if it supports the business.
Yeah, but if it's a multi-member, or you can have an LLC that files as an S corp, if you don't want to do
Right,
a pass
right.
through. So it
Yeah.
just depends.
Yeah.
Right. Gotcha.
But I mean, even under the LLC, if it was a single member, that's still going to be business tax. The only time that you can look at that, I guess it will be like you said, a sole prop as an individual, correct, Jay?
Yeah, but the IRS considers a single member LLC a disregarded entity. So a sole prop is the same thing, right? You file a Schedule C, which is a business. It's basically the same thing as a personal return. You have a 1040, and a Schedule C would report the business income. Whereas with the corp, you're going to have like a K1, and that kind of thing. So yeah, IRS considers a single member LLC something called a disregarded entity. So essentially a sole proprietorship, because technically, if you think about it, you're the sole proprietor.
Yeah. If you're a sole prop, absolutely, I agree with that. If you're a sole prop, but okay, that's news to me. All right. Well, also personal financial statements, a PFS. You'll hear the lenders ask for a PFS, personal financial statements. Understand that. Also remember these acronyms too, because of course they use a lot of acronyms in lending, and you like wondering what the heck is that?
I'm sorry,
Go ahead, Kaya.
Mo. Are we going to another slide? Or are we still on this same slide?
We're still on the same slide.
Oh, okay. All right.
Yeah, I'm just talking to you guys right now.
Oh, okay. Thank you.
I got you. I'm going to go to the next one in a second. Okay. So personal financial statement is the number 4. Okay, which is the other documents that would be requested. And the PFS basically gives insight to the borrower's financial strength and the ability to support the business. So it's just really a summary of personal assets. This is when they want to look into what is it that you own? What do you have as collateral? Also, what about your liabilities? And so the PFS will spell out what you own. It will also spell out what your liabilities are, and then also what your income and your expenses look like. Okay. All right. So number 5 is business financial statements. Your business financial statement. These are your profit and loss, balance sheets, cash flow statements. Okay. Business.
I think we're a slide behind.
Say it again.
I said I think we're behind the slide.
Yeah, we're on why it matters.
Yeah, I know. Yeah, I know. Yeah,
you just gotta take notes.
Yeah, just
you gotta take notes.
Yeah, just take notes. I'm going to the next one. Jeez.
My bad. I seen it flash over and flash back. That's why I said that.
Yeah, I did too.
All right. Okay, so now where is that? Okay, number 5. I'm just giving you guys. I'm giving you guys a couple of things. We're gonna move to the next one, but I'm giving you a list of documents that's needed in commercial lending. We're gonna move to navigating, lender guidelines. That's next. Okay, that's next. So right now, but I want you to understand that these are the documents, the personal financial statements, profit and loss. That's another document that you're going to need. But the interim financial statements, this is another one. Interim financial statements. This is your year to date. Okay, this is basically what this is the most recent profit and loss and balance sheet. It's called the interim financial statements. This is your year to date. These are all the different types of documents that you're going to need and commercial lending and things that they will ask for. Okay, they don't ask for all these things all the time, but these are about 15 items that they typically will discuss in some capacity. Interim financial statements. Write this stuff down. This is your year to date. And that's basically, once again, it's your most recent profit and loss and balance sheets since the end of the year of the last fiscal year. This is the end of the year financial picture. Okay. So it's needed just to help lenders evaluate the current financial conditions of your business. This is why they use the interim financial statements. You'll hear that term, interim financial statements. Another term that you would hear would be the business debt schedule. The business debt schedule. See, I'm doing it this way, guys, without it being on the screen, so you can write it down. So a lot of times I put it on the screen, you guys just look at the screen and you don't write it down. So by me just telling you right now, you're forced to write it down. I told you this was going to be hard. All right. So now the business debt schedule. Business debt schedule. What is that? Okay. A business debt schedule is a list of all current business debts, including the lenders, including the loan amounts, including the balances, and the interest rates and payment terms. This is another document that they're going to ask for, a business debt schedule. They want to know about the business. What is the debt service coverage of the business? They want to calculate that. Okay. And that's really just a list of all current business debts. They want to know how much debt you're in. They want to know what's going out. That's including the lenders, the loan amounts, the balances, interest rates, and the payment terms. This is all about the business debt. And they will ask for a business debt schedule. So when you hear these terms, you're not shocked. Okay, you guys already know about number 8, which is bank statements. You know about bank statements. They typically ask for 3 to 6 months of business bank statements. 3 to 6 months business bank statements. Okay, and what that is that's basically verifies the cash flow and confirms the accuracy of the financials, the other financial documents that we support, tax returns, the debt schedules, things like that. All right. Collateral documentation. That's documentation showing ownership and value of assets, okay? Sometimes you may have heard it as an asset report. There's another one who's got an asset report. You want to see an asset statement. That just provides the security to the lender in case of default. They want to know how much collateral you have. What are they attached their money to? Okay. The overall terminology is just collateral documentation, but you may hear them use this as asset reports. Okay. Lease agreement is another one that they typically may ask you for, you know, especially if it's a property that you're buying that's cash flowing. They want to know, you know, the lease agreement. They want to know the longevity of the tenant, how long they've been, what their payment arrangements have been, how their payment history has been, and how much longer they have in that lease. So that's what the lease agreement shows. So when lenders look at this, they're looking at the security of this loan. So think about it this way: you're buying a cash flowing business, and you're saying or loan or property, and you've got tenants in that. They're utilizing that lease or that income from that tenant to offset your payments. This is what's called DSCR, right? This is called DSCR. This is the debt service coverage ratio. So they use the lease agreement to see how long this person has been leasing, how long they have left on their terms. Okay. And it also shows what the payment is to the company. So this is how they calculate how long they're going to. This is how they're going to calculate debt to income. I'm sorry, debt to income ratio. Not debt. I'm sorry, not debt. Debt coverage service ratio. They're going to calculate debt service coverage ratio, not DTI. Sorry about that. All right. So now we get to navigating lender guidelines and underwriting. Those are just some of the different documents that I wanted you guys to write down as it relates to loan packaging. We went over some of this stuff before, but those are just some other additional documents outside the executive summary, outside of the P&Ls and other things that they're asking for. It's just additional documents. So navigating the lender guidelines and underwriting criteria. This is basically lender guidelines are just specific criteria that lenders use to assess whether a borrower qualifies for a loan. So they use things like minimum credit score, debt to income ratio, collateral requirements, business operating history, requirement documents. These are things that you want to kind of know off of the tip of your mind when you're talking to a customer. You want to ask questions such as, hey, what's your credit score? Do you happen to know what your DTI is? Okay. What about collateral requirements? What do you own? This is just helping you to guide your conversation. What do you own that we could liquidate? You're not going to say that, but what do you own that we can attach this loan to? Okay. So the minimum credit score is basically the lender's looking for personal and business credit scores. Often it's 680 plus for traditional lenders and 600 plus for SBA loans. So if you know that you've got to go through traditional lenders and you need unsecured loans or you need some real estate funding, traditional lenders all typically start around 680 and better for traditional loans. But if you know you have a customer with lower credit scores, you can go SBA because SBA starts at 600. So these are also other things that you need to know as you've been a commercial broker. Just kind of off the top of your head, like, well, I can go here, I can go there because your credit. I know that I can't take this particular customer traditional because their credit score is a 605. Maybe I'll look at SBA loan. Okay. And so this matters because what it does, it indicates the borrower's history of repaying debts. A low score basically suggests to lenders that you're high risk. A low score to lenders just suggests that you are a higher risk, which is why we're always talking about credit restoration. And, if they need help with their credit, it's something that we can get in and, help them to fix so they can meet this basic 680 requirement. Okay, that's important. Debt to income ratio, DTI. Debt to income ratio, DTI. You hear that all the time. And that's basically total, that's just the total monthly debt payments divided by gross monthly income. It's the total monthly debt payments. If you ever want to figure out DTI, you figure it out by adding what your total monthly debt payments are, and you divide that by the gross monthly income. And that's going to give you your DTI. Okay. Ideally, DTI needs to be under 40%. Really, I like to say 30%. I like to say 30%, but there are lenders you can get it down with 40, 50%. But if you want to really keep it kosher, you want to keep it around 30% DTI. That just opens up more doors for you. Okay. And what DTI does is just really demonstrates the borrower's ability to manage their monthly debt obligations. That's what it does. It shows the lender that you have the ability to manage your monthly debt. That's what DTI determines. And that's what it shows the lender, that you have the ability to manage your debt properly every month. Collateral requirements. Collateral requirements. This is for real estate, equipment, inventory, or any other business and personal assets. Collateral requirements. Now, what this does is for underwriters and lenders, it reduces the lender's risk. When lenders are looking to lend money, when they have collateral, it reduces the risk because, once again, underwriting is all about risk minimization. It collateralizes the loan because now they have something in hand that they can seize if the loan defaults. So collateral requirements plays a big role in getting your rate down, getting things like prepayment penalties down. It determines, your fees, right? Because of collateral. The more collateral that you have that can offset the risk, the lower the rate goes down. Because the loan becomes less riskier. Okay. The business operating history. What lenders are looking for is typically 2 years or 2 or more years in business for conventional loans. So anytime you're looking for funding, typically you're going to hear lenders ask, how long have you been in business? And the sweet spot that they're looking for, depending on the product, and let me just throw that in there, depending on the product, it's a minimum of 2 years. But depending on the product, they may want more. So that's another thing that you have to watch out for. So yes, 2 years is typically the time in business that lenders are looking for, but depending on the product, that can be increased. I know that a lot of the loans that we do in the business space, a lot of the maybe MCAs, lines of credit, things like that. A lot of them want, some of them want 4 years in business. Okay. And if you don't have that, the less time in business, once again, we're talking about risk minimization, they're going to offset your loan or the time you've been in business by how much they give you. How much can you handle? How long have you been proving yourself time after time to be profitable in business? 2 years? They may say not long enough. Someone may say, okay, that's fine. But if they want to see more history, it's because of the type of loan that you're going after. Because it demonstrates the stability and industry experience and operational consistency. That's why that matters. It demonstrates stability, industry experience, and operational consistency. Okay. Bank statements, required documents like bank statements, tax returns, business license, ownership information. Let me ask you a business license, see if you guys notice. Do all loans require that you have a business license? And if so, or if not, why? Do all lenders request and require that you have a business license? Is that a requirement across the board? If not, why not? And if so, why? You want to take a shot at that, G? I see you eagerly raising your hand and rocking and
Rock.
Rocking and rolling.
No. Not all lenders require that.
Why
Actually,
not?
I find it pretty rare. Well, not every county requires you to have a business license. You got
There you go.
unincorporated counties and also online businesses, things like that. Things
So
of that nature.
thank you.
Yes.
That's my signature line. So the reason why our lenders don't require you have a business license is because your county don't require it. Okay. If your county doesn't require you to have a license, the lender can't require that you have a license. Okay.
That's probably the same way for brokers too, right? So if we're brokering something out, you got to ask the lender, hey, am I protected? Can I broker in this state I don't live in?
Like for commercial lending.
Anything, man. Like hard money commercial. I've heard that broad term.
Yeah.
So
It
you, I mean,
depends
you have
on
to
the
be like,
lender.
Yeah. It just depends on
California has rules about MCA lending. If you live in California and you're a broker and your client is in California, you have to have a license.
Yeah. Yeah. You guys remember the 5 C's? We did a whole training on this. You all remember the 5 C's? All right. These are the underwriting.
Yes.
You do? Who remembers the 5 C's? You remember, Sean?
I do. Okay.
Eva got it. Remember? Okay, good. All right. So remember that the 5 C's: credit worthiness, capacity, that's capacity to repay, right? Capital, collateral, and conditions. And then we did a whole entire training on this. So underwriting is the lender's internal evaluation process used to determine whether a borrower qualifies for a loan. All of that includes is the credit worthiness. We talk about that all the time. Is the customer credit worthy? Okay. Do they have that 680 or better credit score? Do they have a lower debt to income ratio or lower credit utilization? Why do you think that credit worthiness is a big part of this? You know, they look at your credit. Why do you think a credit worthiness is a big part of lending?
behavior.
It determines behavior. What else does it what else does it determine?
Your ability to repay.
Your ability to repay, okay, which is still behavior. It also shows the lender who you're doing business with. On your credit, when they check your credit, it shows who you're doing business with, okay, as it relates to your credit report and your credit worthiness. So what they would do is they will look at that particular lender that you're paying and determine whether it's a secondary lender, first a hard money lender, conventional lender, traditional lender, and they want to see how you're paying those particular type of lenders back. You get dinged for certain type of lenders being on your report and who you're paying back and who, because with lenders, they'll look at some of those secondary lenders and ding you for being with a secondary lender, even though you're paying them. It's just become a higher risk. Why? Because paying that particular secondary lender, it comes with higher risk, higher rates. Okay. So it determines your credit worthiness of the borrower, and also the capacity to repay, like G just said. And it also shows equity, capital invested. What do you have? What are you coming to the table with? How much skin in the game do you have? It also shows collateral. What do you have to offer? These are the 5 C's. What do you have to offer as collateral to secure the loan with? Okay, whether it's a property, whether it's equipment,
My mama's house.
Yeah. Whether it's G's house or Dave's house, yeah, we got collateral. And G, you have a really big house, so that's definitely going to work.
Help me import.
All right. Conditions. What about conditions? It determines the industry, the loan purpose, and the economy. Right? So the five C's is credit worthiness, capacity, capital, collateral, and conditions. These are the key elements of underwriting. This is the blueprint. This is the map. This is what they're going to use right off the bat to determine whether or not this is a good loan or not. And this is what you have to understand as a broker. Remember the five C's: credit worthiness, capacity, capital, collateral, and conditions. Okay, so loan submission best practices. Listen, complete documentation. Ensure all documents are up to date and match the lender's checklist. You should have a checklist when you're packaging your loan. We give everybody a checklist for submission. So we do have a checklist for submission. Okay. You should make sure that all documents are up to date and match the checklist to make sure you have everything needed for your loan. When you're talking to your clients, make sure you're asking for it. If you don't have a checklist, let me know. We'll make sure that you have that in your email. I know we gave them out some time ago. Clear organization, label the documents, separate the sections, include cover letters, summarize the loan request. Okay, these are different things that you could do as a best practice. Have a strong executive summary. That's one of the biggest things I like to know. One of the things when I'm talking to clients, I really want to see your executive summary. I want to see how strong it is because it's got to be compelling enough. Okay, before we start submitting, we want to know what we want to know all about the project. We want you to summarize the project. We want to know what the use of funds is going to be. We want to know what the repayment strategy is. Also, the executive summary also shows the exit strategy. I know it doesn't say it right here, but it'll also determine the exit strategy. And that's big with lenders. They want to know how we're going to get out of this, how we're going to liquidate. If we loan you the money, how do we make sure we get our money back? That should be spelled out in the executive summary on top of the projections that's normally included. We talked about the pro forma last time. You guys remember that? That was one of the other documents that we talked about in the last training, the pro forma, okay? So the executive summary, a lot of times we'll have that pro forma included in there. Make sure that that you are consistent. Make sure that figures across the tax returns, bank statements, and all financial numbers match. Why is that important? Because you may have 3 to 6 months of bank statements, but then the taxes say something completely different, and that happens all the time. Am I right, G? It happens all the time. They have bank statements, 3 to 6 months bank statements, but the taxes, man, it gets you every time. Look at that face, man. I know you're paying, G. All right. This is the day-to-day saga of our life. All right. So we want to highlight the strengths of the deal. Call attention to the borrower's experience. That's going to be in the executive summary. You want to know the lenders. Why do lenders want to know? This is a good question. Why do lenders want to know your experience so bad? Why will a lender be interested in knowing you're buying a restaurant? Why are they concerned about your ability to well, I'm going to ask you a question. Why are they concerned about your experience? What would that reason be?
It could be a high risk.
Okay. She said high risk.
So they know that, so the business will succeed and they'll get paid.
Okay, so the business will succeed and they'll get paid. What do you elaborate on that a little bit more? You're right there, but elaborate that on a little bit more. The business will succeed.
So if they don't have any experience, how you're organized, you know how to do, take cash, process it, advertise this and that. A more experienced business owner will succeed in profiting.
Correct. In essence, what the lender wants to know is who's going to be managing the money that we're about to lend you. Who's managing this business, right? So say that you're requesting, $100,000 to open a restaurant because you've got all the desire and you've been cooking at home and everyone says that Sean's chicken is just the best chicken and, but guess what? Sean is like, hey, I want to open up a business. I got the best chicken in the world and everybody loves my chicken and I just need $100,000 to open up this restaurant. Can I borrow it? Lender says, okay, Sean, I understand that you a really good cook, but what is your experience with running a restaurant?
Nothing. Can I send you a sample so you give me the money?
No. Absolutely not.
Tastes really good.
Right.
Don't fall for them though. That's how they get you
I
hooked.
know.
They give you a little
They want me to
taste.
bite into the chicken. Exactly. Yeah. But here's the deal though, right? So yes, you got great food. I've heard the reviews, but what experience do you have with running a restaurant? I'm lending you $100,000. Are you proficient with marketing? Are you proficient with running the day-to-day operations? Are you proficient with, scaling the business? Are you proficient with the ins and out of the restaurant industry? How many restaurants have you managed, and what was your success in managing those restaurants? So this is what lenders are looking at when you want you to highlight the strength of this deal. They want you to call attention to your experience because of that reason. You're asking us for money. We want to know who's going to be responsible for making sure that this business venture don't go bad. Because they're not in the business of losing money. Lenders are in the business of making money, okay? So this is why it's important when you are submitting your loan application and executive summaries, even if it's for yourself, that you spell out and you give great attention to your history. This is why when developers and someone says, hey, man, I need a development loan. I want to build a project. All right, the first thing the lenders want to know is what's your history in developing? How many projects have you already developed? Well, I haven't developed anything, but I've seen other people develop and I need the money. I've got some developers on my team. Well, as a lender, I can't give you the money to develop a project because you've never had development experience. But what I can do is allow you to bring someone to the table, a developer with a development experience that we will loan the money to. So in development case, what the lenders do is say, okay, we're basically going to loan you the money based on the strength of this developer. The developer is going to be carrying this loan until you can secure permanent financing. It's called permanent financing. That's at the end of the development. Once the development is completed. This is why developers want to make sure that you're qualified to even get financed. So at the end of that term, they're not stuck with a development. Okay? Does that make sense? They're not stuck with a development. So throughout the process, when I was building my home, every month they would call just to make sure my credit was still the same, finance was still the same, nothing changed. And they would call the lender just to make sure. Why? Because right now, as we're going through the development process, the lender is on the hook right now, not me. The lender.
Yeah, I would say like the summary would need references, right? If you had experience, how do they know?
Absolutely.
You could just say,
Absolutely.
take your word. But what
No,
about the
reference.
people? Yeah, the numbers of people that were on the projects.
Yeah, like, well, you're gonna show HUDs for real estate and things like that. You're gonna show the HUDs. They're gonna ask you, I mean, how many projects have you done? How many, you're gonna do that by way of HUDs and development contracts, things of that nature. Okay, but as it relates to the the restaurant business, yeah, it's gonna be references, referrals. Going to be you're gonna have a resume. And that resume is going to spell out the companies that or the restaurants that you've run and that you've ran, and it's going to spell out the successes that you've had at those restaurants and um, how you did that. So, all right. So, professional presentations, you want to use things like templates or softwares to cleanly organize these files. Okay. You want to keep records up. You want to make sure your records is tight. Keep a copy of everything you submitted and follow up within 20 to 40 hours. Just confirm receipt and check your status. So, this is just these are just best practices that you can practice when you're submitting. You can, initiate in your submission of loans. Submitting a clean and complete and confident loan package shows, shows lenders that you are serious and trustworthy. So often making the difference between a delay and a yes. I heard Sean say something about the delay earlier. So that's one of the other reasons, additional reasons that lenders want to have a clear package here because you want to alleviate delays in this process. Not only just not about denials, but it's also about delays because the more you submit deals without all of the necessary documents, it's just going to have the lenders requesting more and more documents, and now you're just delaying. So it's best just to have all of these things up front because now that you know what to ask for, you know that you need to ask for your debt to income statements or collateral reports and business operating history. You need to ask for these bank statements and business debt schedules and all of these things that lenders would typically want to see to make sure that this customer has the capacity to pay the loan back. They have the history to run the business and not, uh, uh, and not cause the business to fail because of lack of history. You want to make sure that all your records and things of that nature is kept up to par, and you got good copies of that. So here's once again the must-haves, loan package must-haves. Number one is a 1003. You guys will hear that term all the time. That's just a loan application. You might hear a lender say, hey, I got to send you over a 1003. A 1003. Now you know what that is. I'm sending you over a 1003 or a commercial equivalent. Okay. That's just a loan application. You hear that term. Credit authorization form. That's just an authorization form that's giving you the ability to pull your credit. 2 years of tax returns or P&L statements. Last 6 months bank statements. Entity documents. And with the entity documents, they're looking for articles of incorporations and operating agreements. You want IDs for all principals. All right. All partners in the business. You want IDs for all of them. Property details. You want the rent roll, photos, appraisal, insurance info, purchase agreement. These are all the things that you want to have as it relates to packaging your loan together. These are the documents that's needed. Am I going too fast? Am I okay? I'm good.
You're good.
All right. So overcoming the loan application challenges. Now, these are common challenges and how to overcome them. Number one, incomplete application. Incomplete application. These are challenges that we have with submitting loans. So you need to use a checklist and make sure and verify all documents are included before you submit it. Make sure that your application is complete. Remember, we're talking about making sure that the loan is not denied, delayed, or just being held up because of an incomplete application. Another challenge is low credit or limited income. The solution to that is offer co-borrows, larger down payments, explanation of letter of explanation. That's called a LOX. You'll hear that term, LOX. LOX, the acronym for letter of explanation. You would think it would be LOE, but it's LOX. Okay. Letter of explanation. Letter of explanation. That's what it's called. And what a letter of explanation does is basically a lot of times lenders, when they ask for a LOX, what they're really asking for is just to give us an explanation of why the credit is what it is. Okay? Give us an explanation of why the credit scores are low. Okay? What happened?
You got a lot of flips going on.
Yeah, no. Trying to cut it out. Let's see.
Well, no, fixing flips because they're gonna pull their They're gonna hard pull their credit if they got multiple flips going on, right? So the credit score be going. You got to explain that. So they're like, "Oh man, 500. Why? I mean, we're gonna decline you." But then you could save it. Be like, "Oh, I've got a lot of experience going on right now. These are just hard inquiries."
Yep, that's an explanation. Or you can, just tell, hey, I was in the hospital, and so I got a collection here, or I went through a divorce, or I went through a bankruptcy. Anything that's going to show why your credit score is limited, you have to explain it. So that's called a LOX, letter of explanation. What about the property doesn't meet guidelines? Okay. That's another challenge. The property doesn't meet the guidelines. Some properties are in rural areas. Some properties, are dilapidated. They don't meet the minimum financial requirements. Some lenders won't do any loans under $100,000. So there's property requirements and guidelines when it comes to lenders. So if that's the case, you want to seek alternative lenders or just adjust the loan terms. Sometimes you have to seek alternative lending options. And that's where we come in at. And us finding more and more lending options, we want to make sure that we're not leaving any type of deals on the table because one particular lender doesn't necessarily have an appetite for this particular loan. So we're going to seek an alternative lender. So our goal is to make sure that we have different types of lending programs available from different lenders that have different criteria and different appetites, and they have different risk management or risk measures. Okay. Another application challenge is delays in communication. That's another big one. So we want to set clear follow-up times and maintain constant communication with both parties and the lenders. Confusing the deal structure. This is another application challenge. This includes a one-page deal summary with a simple breakdown of entity flows and funds and the exit plan. We talked about that earlier. Lenders want to make sure that there's a strong exit plan. Okay. So rejection isn't always final. Many deals are declined not because of the business, but because of poor presentation. Isn't that something? So not necessarily because of the business, but it's because of poor presentation. Reframe the rejection. Instead of they said no, ask what part of my deal made them uncomfortable. I think we just talked about that yesterday. We just brought that up yesterday. And asking the client, or in this particular, it would be the underwriters, what part of the deal made them uncomfortable? Yesterday, when I was speaking, we were speaking from a client standpoint, and the client telling you no, you want to ask, what did I do or say or didn't do to make you say no? It's the same thing with the underwriter. You want to use that same technique because you want to get this feedback. You want to get written feedback from the lender. Okay? You want to get written feedback from the lender. You want to improve one or two key areas. All right? Better collateral, co-signer, revise the loan amount. These are different strategies. All right? Consider alternative lenders, CDFIs, okay, fintechs, peer-to-peer lending, or private money. Okay, y'all with me?
What is a CDFI? That sounds like that's going to be a trick question.
Okay, so that just basically stands for Community Development Financial Institution. Okay, so what a CDFI is, lender is a bank. It's a credit union. It's a type of lender. Okay, a CDFI is a type of lending, a lender or bank, credit union, loan fund, a venture capitals. All right, these are the different types of financial institutions. So it stands for Community Development Financial Institution. These are private financial institutions that their mission that they're mission driven. They're mission driven to provide like responsible, affordable lending to help like low income or underserved community or disadvantaged type communities.
Like church loans or something, non-for-profit banks like Stearns Bank.
These are lending platforms that's going to help low income individuals get funding. Okay, got it.
Got it.
Okay, and then you're gonna have your P2P, or you'll hear it as P2P. That's which means peer-to-peer. And what that is, that's really just a form of direct lending between individuals and businesses. That's called peer-to-peer or P2P. You'll hear P2P. Write that down because that's an acronym that you will hear in lending, P2P. You use a lot of acronyms. That just stands for peer-to-peer. All right. And peer-to-peer funding or lending is just a form of direct lending between individuals and businesses. Now, typically, these are facilitated through like online type platforms without involving any type of traditional financial institutions like a bank. So when you go and you apply for like gap funding, that gap funding is peer-to-peer lending. Okay. So, or P2P lending. Now, that allows borrowers to get loans directly from individual investors. All right. Cutting out the middleman, banks. All right. So once again, it's often used for things like personal loans, business loans, or debt consolidations. So you will see that gap funding is a P2P type funding. Okay. Now, the advantages of P2P funding is what? Faster approval. This is why we can get loans done in 5 to 7 days with P2P funding, which is gap funding. Faster approval compared to traditional banks. This is when we try to explain to customers that, you may not necessarily get to go to your bank and get $200,000 because of their lending requirements, but and if you do, it may take you a couple of months to get that with the approval process. But if we did like a P2P type lending scenario, you're talking faster approval. You're talking fewer barriers, okay? Because they may accept lower credit scores. You're talking competitive interest rates, all right? Especially for like credit-worthy type borrowers. You're talking about no bank involvement, which means these particular P2P loans are more flexible. Okay. Now that's the advantages for the borrowers, P2P. Now for the lenders like it P2P type deals because it gives them a potential for higher returns. P2P funding typically has higher interest rates than traditional type loans or the traditional type investment type vehicles. It also gives the ability to lenders to diversify their investments across the multiple borrowers. Okay. It gives lenders control over which loans to fund based on risk appetite. So this is a P2P, right? What's the risk of P2P lending? What's the risk for the borrowers? It may be, it may have higher interest rates, like I stated. A missed payment can severely affect your credit. Remember, I was talking about earlier that the lenders look at exactly who you get loans from when you're talking about your credit worthiness, who you got the loan from. A secondary lender missing a payment with a secondary lender is more crucial. Okay, then you're gonna get held accountable even higher with missing a payment from a secondary lender than you would with a traditional lender. Okay, you're gonna get dinged higher. Why? Because you wasn't able to go to the traditional lender. You had to take a higher risk loan, and you messed up even with that one. So you'll get a higher ding for that reason. All right. So application challenges and how to win. Listen, the real world challenges, incomplete documents, tax returns that don't match financial statements. We talked about that. Business owners who can't explain their numbers. Okay? So you have to be able to explain your numbers when you're asking for funding. Business owners, a lot of times, if they don't have a CPA, an accountant, or they don't have their books in order, a lot of times it's really hard for business owners to explain their numbers. And you want to be able to do that. All right. So business owners who can't explain their numbers is a challenge. What about an outdated, business plan or vague business plan, not enough substance in it? You want to make sure that your plan, your executive summary, and your package, your pro forma has enough substance in it. You don't want it to be vague. You want to make sure it's dated. Okay? And it's up to date. Not dated, but it's up to date. So what do? You use a checklist before submission. This is why we keep talking about the checklist. Why is that? Because you want to treat it like boarding an airplane, no missing parts, right? You want to hire a partner with a loan package or with a loan packager or a funding advisor. Practice your pitch so you can know your numbers before talking to the lenders. Practice what you're going to say to the lenders so you can know and explain your numbers and tell the story, because that's what it boils down to, is telling the stories and the numbers making sense. Okay? So when you follow the process, team, when you follow this process from start to finish, okay, from start to finish, you can match the lender's criteria, present a clean file, and handle objections with solutions. This is when you start changing the game. This is when you start changing the game. We're talking about from decline to a done deal. All right. So it's that loan packaging and understanding the documents can take you from a decline to it being a done deal when you follow the process, when you match the lenders. Okay. And I've got a book that's going to be coming out called The Recipe. I've got one right now that's almost done. We should be complete in I think a week or so. That's called The Game. But then I have one that's called The Recipe. The Recipe does just this. It matches the lender's criteria and shows you exactly how to get approved by following a particular process. Because here's the truth of the matter. Here's the truth of the matter. You can get approved for anything that you want to get approved as long as you follow the process. It's a recipe. Okay? You can't make chili without beans. Well, some people do. But, you know,
yeah. I didn't know you wrote a book, man. I knew you were gonna I had this vision of you writing books. I didn't know you had some. That's very interesting.
One book is complete. We're just touching up the last of it right now. That's called The Game. It's going to be credit secrets, everything step-by-step plays. It's going to show you how to sweep your file, and where to go to get certain monies from, and everything's going to be step-by-step inside secrets, okay? That's called The Game. But The Recipe, that book is going to, when that book comes out, it's going to give you the recipe to getting approved for any amount of money that you want to get approved for. And I'm going to show you step by step how to do it and what it's going to take. All right. It's just a process. So remember to choose the right lender, package your deal like a pro, learn from the rejections, and be proactive and not passive. That's it. Choose the right lender, package your deal like a pro, learn from the rejections, be proactive and not passive. Okay? This is how you take your deals from decline to it being a done deal. All right? So, loan submission and documentation is very important, especially in the beginning stages of your submission. You want to make sure everything is completely packaged together properly, or your file is going to be delayed, it's going to be denied, and that's not what you want. That's not what you want. So this training is this training is definitely necessary for you to understand loan submission. Okay. All right. What questions do you have? I'm looking in the comments right now. Might have to leave due to weather conditions. Okay, Benny. Let's see. Wings up. Mute. How much? Damon, what was your question? You said how much?
I was asking about the cost of your book.
Oh.
Yeah, how much is the book?
The book is going to be $50.
I'll pay now.
The book is $50.
Good stuff.
Yeah, $50 for the book. And for Damon, it's going to be $150. just for you.
Don't worry, guys. I'll pay for it and give it out for free. I'll give it out for $20.
Oh my God.
Oh man.
All right, so there we go. That's loan submission. This is the part 2. We're done with loan submission now. We had to do that in 2 phases. That was all loan submission and documentation. Okay, all loan submission and documentation. I am going. Any questions so far? Any questions? That wasn't too hard. Go ahead, Sean. I'm listening, bro.
Yeah, I was just because I know I love this stuff, and there's some things that I learned that I didn't see. I mean, it's not that it's you guys probably are coming up with it, but just coaching the borrower too. I had something. I almost lost a loan today because this wasn't a good estimate. I'm looking else 5 more lenders, or they didn't take the appraisal. I asked her again. I said, "Okay, so what did you get?" And then ended up mixing up some other lender because she's shopping, and I won the loan because I reminded her, "Hey, did you look? This is the one, like organization that
Yeah,
if the borrower is not very organized, and the brokers got to be organized." So I think that's very good for wins too.
yeah, good, good. Okay, guys, I put the test inside the assessment. It's in there. All right, so a lot of what I just went over today, yes, is definitely going to be needed information, especially on the big exam. So I'm going to go ahead and see who's the smartest in the room. Listen, I've got $10. Matter of fact, I've got $15 on Eva. I put all my money on Eva because I know that Eva's about to get the highest score on this team. I don't know about G, but I know Eva's gonna come through for me, right, Eva?
On my final,
Huh? What?
I, I always get the 100% on my finals. I never get 100% on the
That didn't sound
assessments.
too
It's
convincing.
weird. No, I'm being honest.
All right.
Serious.
All right, come on, guys. Let's click on the link and let's go ahead and take the assessment. And
G, you might want to put your money on me, buddy.
I gotta put my money on you, Dave. Put it on you.
Yeah, I was telling G he can counter. He can counter off of that bet.
G's over there taking the test right now. Look, let's see. All right, guys, I'm going to take the test too. This is too easy. You got to make this harder next time. You're too smart. Y'all don't have to agree with me.
It's not showing me the results.
You're not seeing the results?
And it shows like everyone's cumulative results.
Yeah, it just says your submission has been recorded. What?
Terrible.
Wait, your results say terrible, G?
Yeah, it's terrible.
What?
I would like a refund. I paid for this course. Did you guys pay for this course?
Shh.
Well, I heard what it costs. I'm glad I didn't pay for it.
I don't
They
know.
had
There's
that
some of
trick
those
question in there again.
Yeah, some of these are kind of trick questions, I feel like.
Come
Yeah,
on.
I heard a funding recorder.
Yeah, it's a little tricky. Or the what was the other one? There's another one that's kind of like business licenses are important for credibility with lenders. Some lenders, some not.
Yeah, that's kind of great.
G.
Oh,
Some lenders, some not. I mean, we need definitives, Mo.
I don't want to hear any crap out of you, sir. Not becoming.
so I'm guessing the responses will be shown on the whiteboard here after we're all done.
Yes.
Who won?
Is everyone finished?
Mo's still taking the test.
No, I'm done. I was done first. You didn't hear me say how smart I was?
Mo's still taking the test.
I noticed
Don't
no
let him
one.
fool you.
I noticed no one agreed with me. That was shocking.
No, I agree with you, Mo.
Thank
I
you.
was just taking my test.
Thank you.
No, I agree with you too. I'm
Thank-
still taking my test. I
We
had
didn't
to
want to
stop.
say that Emperor didn't have any clothes on.
What? Wait, who? Wait, who's naked? Gee, again?
Danica.
Who
Gee?
didn't have any pants on at the video call?
Hi. It's
Oh, y'all
Danica.
remember that training?
We're pretty sure that training's out there somewhere.
That was the training of the year, guys. He was like, "No, I saw all of it. I saw his junk." I was like, "Wait, it was accident."
Catherine, she seemed very upset by this.
I miss Catherine, man. What the heck is she?
Do you ever see that one where they're live and the guy's like, he doesn't know the camera's on, and he's in the bathroom and he's getting ready to do something. Everybody's like, no, turn it off.
Is everybody done yet? No.
Don't worry, Mo's still taking the test, guys. You're not alone.
I'm 100% not taking the test.
So, personal credit does not affect business loans.
Uh-oh, I heard somebody taking it.
False.
Gee, you should have put your money on me, buddy. I got 20 out of 20.
Does it tell you your score?
Yeah.
Hey, I've got
Where?
Says,
Where
I
do you
got
see
I
it?
got an email that says score released.
Oh, damn it. I need to go to my email. I never checked that email. Hold on.
Yeah, I got
It comes from
answers.
Mo. It says score released.
I got answers for $20 an answer. $20. My last final offer.
I got 18 out of 20. Damn it.
I knew I was smarter than you, G. All along.
Let's see what 2 gray area questions I missed.
19 out of 20. It's probably that freaking financial recorder question. It like
I
switches.
got the funding tracker grant one wrong, and the business license are important with credibility to lenders, bro. That's a trick question.
Malik with 19 out of 20. Mo's a great trainer.
What'd you get wrong, Malik?
One I changed, and that was bringing the business plan. Let's see. I got
Damon did good.
a business plan is optional in a loan application. I put optional in my first mind told me
Yeah,
to.
that's another trick question. Sometimes they want it, sometimes they don't.
Yeah, I literally changed that one.
Yeah, I was back and forth with that one too, because it depends on the lender, Mo.
Wait. What was that question? And what am I being blamed for again?
True or false?
Business loan.
Wait,
Yeah, go ahead.
Yeah, true or false? A business plan is optional in a loan application.
I picked true.
That's
No,
wrong.
you didn't, because if you pick true, then it's wrong.
I know that's why I got an 18.
Well,
See, this got one wrong.
Hey, G, you and I are tied. So we are tied. So guess who's got the highest score?
You do.
Dave Rose.
Come on, who guessed?
Yeah.
Rose.
Eva.
No.
Dave Rose, man. Dave got a
right.
top of
Rose.
20.
Dave gets $15.
Dave got 20
He looked
out of
through.
20.
He looked through the trick questions and figured it out.
That's
what it was.
But it's still something I don't know. It's showing different. I don't know. It's showing.
Mo, you got me on 2. I was gonna pick product samples because we were talking about how I don't know how to run a restaurant.
Oh yeah.
And number 2 is can you give them product samples? How did I know that?
Let's see. I'm gonna make sure everybody's finished here.
Well, I tied with Mo, who came up with the quiz, so I feel pretty good.
Let me just for the record, I missed those 2 deliberately on purpose because I just wanted to be on the same even playing field with my team, and yeah, that's what happened.
Yeah, right.
Hey, who was that?
Mo, can you see what I got? I can't tell what my score was.
It's in your email. It's in your email.
Yeah, check your email.
All right, I'm gonna try that.
Yeah, whatever email you use to sign in with, it'll be right in there.
Who's come? Let's see, Comb Enterprise. Who is that?
That's me, Comb Enterprises. Sean Puffy Comb Enterprises.
19, brother. 19, Malik.
Nice.
19. Nice, Malik.
Yeah.
And
I think I might be related. I don't know somehow.
Man, Damon. Now listen, Damon wasn't even here last. Were you here last training, Damon?
Yeah, I came in a half hour late.
No. Damon is cool. The other Damon.
Oh no.
I know you.
I don't know.
He just came in and got a 19, just like that.
Damon Askew just went in, got a 19 and left.
He came and came in at 19 and no, he's still here. There he is, Damon. Tell us how you did it.
I don't see him, do I?
Yeah, he's there. He's right there.
Oh, I didn't do bad. 17 out of 20.
That's good,
Not
man.
bad.
That's good. That's Kaya.
I have 18 out of 20.
Listening to the greatest trainer in the world,
That's what I'm talking about.
Mo Cannon,
That's
is
what
how
I'm
I'm able to get 19 out of 20. So congratulations on your training, Mo.
I like to thank all the little people that made this possible. I mean,
oh, me? Is that me? Are you talking about me?
Sorry, guys.
I'm little right now, but that's okay.
Yeah.
Good job.
You
Thank you, Mo,
explained it
for
well, sir.
recognizing my weight loss.
Mo, when
Hey,
I grow
You
up.
took your you took your
hey, bro,
time and
you
you took your
guys.
time and you explained it. So
All right. So good job, everyone. Good job. Did we forget anybody? Kaya, what was your score, Kaya? Let's see.
Well, I'm sending it in.
Let's see what the people in Hawaii do. Hold on. See about these people
Shut up.
in
See
Hawaii.
you laughing.
Nice profile pic.
Thank you.
Yeah, I figure.
Oh, you're talking to Kaya.
Did you say I want a trip to Hawaii?
I'll be heading to Hawaii from July 20th to July 27th.
Oh yeah, you're gonna
Oh,
be right
wow.
there in Honolulu, right?
Thanks for the invite.
Yeah.
That's what
You're
Kaya.
welcome, Dave. They don't allow people from Ohio and Hawaii, so but we're getting there.
Yeah, they got to start with Californians first.
All right,
Remember
guys.
that. Don't.
I think we covered it all. We are not forgetting anybody on there. 9 people responded. Okay.
Did you forget about me? I took the test 8 times to get that 18 out of 20.
Yeah, it shows me. It shows you got your name wrong though, G, on this test. Name is spelled different. All right.
That was the first question.
All right, good job, everyone. Everybody did good, pretty much.
I do have a question, Mo.
Go ahead, brother.
In reference to the statement or the element you were mentioning in reference to developers and not having experience in the field that they need funding in, and getting someone to back them up or to partner with them on the loan.
Nice picture, David.
Your question. We can't hear anything. Can you guys hear him? Because I can't hear anything he's saying.
Nah, I hear sound waves.
Yeah, we can't.
I hear some music.
Okay,
That was
sorry about
David.
that.
He changed his picture.
Yeah.
Vocal correction, pitch correction.
Sorry about
Damon.
to receive their training or in the development field by utilizing that other individual who was going to be part of the loan?
Damon, I'm sorry, brother. I don't understand the question. You're breaking up. Is it me or is it him?
Okay.
Guys? Is it
Can
me?
you hear me now?
I can hear you right now.
Okay. Want me to try it again?
Yeah, go ahead. Try it again.
Okay. All right. On the element of the training that you were talking about in reference to a developer getting funding and that developer not having any experience in any developments in the past, but wanting $100,000 or whatever amount of money for the development. And they do then in turn bring in someone who has the experience to then in turn get the funding. Will that loan or that project that they got the loan for, will that then in turn count towards that new developer who didn't have any experience at all, who brought things together? Will that count towards them having some experience in the future?
Yes, it will. It will in the form of an operating agreement. You can attach yourself to that deal. You can attach yourself to that deal as a project that you was on that you developed. Okay, so you had development experience with. So now that's done under an operating agreement, but they want to know that you've developed at least 3 properties or projects in your past prior to them allowing you to stand on your own. Okay, they want to know that you know what you're doing as a developer. Since you're going into the field of being a developer, you need to have at least 3 projects done in the past. So until you do that, you've got to partner up with developers that have the interest, that have the experience in order for the lenders to rock with you, okay? In the beginning.
What's the time period they should have them 3 previous experiences? Is it like 5 years or less than or more than?
Normally they ask for, normally they ask for the experience in the last 5 years. How many developments have you done in the last 5 years? That's normally the question. And normally they're looking for at least 3 or more. Damon,
Okay, thank you.
Okay. Damon, did I answer that question okay?
Yes, sir, you did. Thank you.
Okay. All right. You're welcome. All right, you all. Good job. Good job, Shane. Once again, this is our Friday night training. We came together today. We were able to learn and take our assessments and just remember this training. Remember the different trainings and things that you learn. I'm telling you, if you go back and you study these notes, and you guys are going to be in the best in the business and being knowledgeable. A lot of people don't go through this type of training, especially for commercial lending. They just kind of get in. All right, but you guys are taking the time out to learn. Kaya says she's got 17 out of 20. Okay, you missed 3. That ain't bad. That ain't bad, Kaya. Good job. Good job.
Proud
Okay.
of it.
All right. I think my baby Savannah, you on the call with us today?
Yeah.
All right. Did you learn something?
Florida.
Florida. That is not an answer.
She said sorta.
Oh, sorta. Oh, sorta. I think she said Florida. Sorta. Okay. All right. Well, I'm glad to have you on the call, sweetheart. All right, you all.
I gotta go. Bye.
I am leaving for the night. I appreciate everybody showing up. Thank you for showing up again. I will see you all on next week for next week's training. Okay. All right, guys. I will see each and every one of you all at the top. Happy Friday. Have a good weekend. Until next time. Wings up.
All righty. Good night.
All right.
Thanks, guys.
Peace.
Bye-bye.
Bye.
Bye.